Hello guys, it's Stock Trader Max here and welcome back to another video where today we're going to be talking about my largest position in my concentrated portfolio, which is PayPal. If you're new to the channel, then you should know that my position I have here in PayPal, which consists of 10,050 shares, currently sits at a valuation of $657,000. That was my cost bias. I bought in with the average price of $65.50 a share. At present, my position is currently down 6.31% and I'm losing $41,500. That doesn't concern me, however, because I believe that PayPal is an incredibly undervalued company trading at 2017 prices with record free cash flow, record income, and record net income. And I do believe that they are going to return to a high growth company over the upcoming years. Looking at PayPal for the week, not very pretty. For the week, we're now down 4.85%, so let's call it 5%. And there are a few catalysts which I'm going to speak about during today's video as to why I believe the company is down 5% for the week. First being is regulation. Unfortunately, PayPal's business was hit with a new series of regulations regarding their buy now, pay later business. They weren't the only company to have this. Other companies like Klarna, Square, Affirm were also hit with the same regulations. As you know, the buy now, pay later business is quite new. So regulators have now imposed similar regulations that are currently imposed on the credit card business, and they've now imposed it on the buy now, pay later space. So that, of course, upset PayPal stock. But what's quite funny about this is that PayPal were expecting this. This was expected. In fact, Jamie Miller, the CFO of PayPal, spoke about this in PayPal's Q1 2024 earnings call just a few weeks ago, and the implications that it would have on PayPal going forward, which is not too bad. You know, the buy now, pay later space doesn't really have a large impact on PayPal's overall revenue. And then second of all, moving on, PayPal has raised $1.25 billion this week. They have taken on a underwriting with 4 major US banks to raise $1.25 billion in cash, and this debt is to be paid back in 2028 and 2034 with a average interest rate of around 5.25%. Now you may be wondering, why has a company like PayPal just raised $1.25 billion in cash when they currently have $17 billion? Well, we know it's not for mergers and acquisitions. Reason being is because we've recently heard Alex Chriss, the CEO of PayPal, say that, you know, the past 5 years, PayPal has acquired too many businesses and it's very messy, and in fact is actually dragging down PayPal's overall performance. So I'm pretty certain that the reason for raising $1.25 billion in cash wasn't for mergers and acquisitions. So this kind of leaves me with one last reason, and it's a good reason, and I was very surprised that the stock actually reacted negatively yesterday when this was first announced. And that reason is, in my own humble opinion, is that Alex Chriss has taken the decision to raise $1.25 billion to buy back more stock, which is actually very, very good news. Normally, when a company raises capital or raises cash, they give an explanation as to why they've decided to do that. So, for example, if company A raised $1.25 billion and they wanted to acquire company B, for example, they would inform their investors, look, we're going to take this $1.25 billion loan and it's to help us acquire company B. But when PayPal took this underwriting, there was no explanation whatsoever, and this leads me to believe that this was for buybacks, which is very, very, very positive indeed, and the stock should have actually traded higher. So quite confused why the stock is down, but I think it's a very smart move from the management. Right now, looking at PayPal, we're currently testing this uptrend line that we've been trading in since the beginning of October. This is at risk of breaking, so I would like to see a nice deep reversal very soon going into the weekend, which could kind of show that this uptrend is still intact. Now let's just look at PayPal more in depth here. You know, as I just mentioned, we're currently testing this uptrend line, but every single time when we've tested this uptrend line, we've actually gone on to rally roughly 25%. You know, here back in October, for example, it took us roughly 4 weeks and we went all the way up 25% to $63 a share, all the way down from 50. And then again, we retested this uptrend line back in February 2024. This was just after PayPal reported their Q4 earnings of 2023. And look what happened, team. We actually went on to rally another 25%, which took around 5 to 6 weeks. If we were to rally 25% from current prices today, where does that take us? Well, funny enough, that takes us all the way up to the swing highs that we formed back in late August 2023, which would close this gap. So that's what I'm looking for here. Over the upcoming weeks or months, I'm looking for a nice strong bounce off this uptrend line where we can return back above the 50 and 200-day EMA, and we can trade up towards $76 a share. What I like to do, I've mentioned this in previous videos, is wipe all the noise out. It can be very distracting when you focus too much on any particular day in the stock market. So what I like to do is just look at it on a weekly basis. If in doubt, zoom out. And here we have a company that still remains in a nice uptrend here. We've broken out of a 2.5-year downtrend for the stock, and that should be noticed by many investors. I do believe that many investors who look at PayPal, who currently own PayPal or take the piss out of PayPal on X, for example, they focus too much on the past and not enough on the future. It's very easy to forget that at present we have a stock that's trading at 2017 prices. It has record net income, record revenue, record free cash flow. We have a new management team, we have a new CEO, and we have new innovations that are slowly drip feeding into the app around the world. We've heard it from Alex Chris. They're looking to launch a series of their new innovations within the US. In Europe, they're already live. So this is very, very positive for the stock. It's just going to take some time. I think what's also important to realize here is that we have a stock that has a safety cushion under it to a certain extent. I think that if PayPal was to fall down to $50 a share, the company would become significantly more aggressive with corporate buybacks. They would buy back a lot more of their shares and use the $10.7 billion, which is currently authorized to buy back their company at a more aggressive pace. And that does in some ways offer a safety cushion here for PayPal. And I hear a lot of people talking about the opportunity cost lost, while sitting in a stock like PayPal. And yeah, sure, you might have been an investor yesterday and saw stocks like Nvidia, for example, jump up 11%, which is a $2.5 trillion company, jumping up 11%. People saying, oh man, I'm still stuck in PayPal. I could have been in Nvidia, such an easy trade, that and stuff. But okay, sure. But the same people who continue to argue that a stock like Nvidia, for example, is still cheap, if this stock was to pull back 30-40% in the upcoming weeks or months ahead, the same investors that are arguing that it's cheap still would also say, oh, actually, you know what, a 30-40% correction in this stock probably was right. It did become a little bit frothy. And that's the difference. A stock like Nvidia, a stock like Supermicro, a stock like Meta, these stocks could easily pull back 30-40% in the upcoming weeks or months when there is a cool down in the stock market, where a stock like PayPal, it has that safety net underneath it where you have the company that's going to come out and continue to buy back shares. And for that safety net, you do pay a price, and that price is called time. It's a different currency, but that currency is time. It requires a significant amount of patience, but with enough patience, this company will prove to institutions, to investors, that it has turned around. It is a new company, and then that's when it will be appropriate to then look back at historical chart patterns here for PayPal, and then we can go and target pre-COVID prices, which sit around $122 a share and probably above that. But yeah, I really like PayPal here. My final message to everyone here on YouTube is, Daddy, chill out, calm down. Okay, we have a company that is in a big turnaround process. It's going to take a few quarters. We know that. But as I've said on X, Daddy, chill, calm down. I know we're down 5%. I know we were down 5% 2 weeks prior to this week. We're down 12% now since PayPal reported the earnings. What's important to understand, team, is that the fundamentals are not getting worse. The stock price is getting worse, but the fundamentals are getting better. And stocks follow their earnings. It happens all the time, and you just need to remain patient. One final thing before I let you guys go. We had some very good news yesterday. Venmo is now currently in the process of being monetized. We've had many critics come out and say, Venmo is such a good product, but PayPal don't know how to monetize it. Well, that monetization switch was switched officially last night, 2.99% per transaction when payments are tagged by sender as goods and services. So this is very encouraging to see as a PayPal investor and shareholder. I'm very, very, very happy with this news, and I think that this will have a very positive effect on the revenue and net income of PayPal over the upcoming quarters in the years ahead. So this is very encouraging news. Guys, to wrap up today's video, don't forget, I do have a Signal team. If you enjoy my work and you want to follow me on a more personal note, then make sure you join my team. This gives you access to my Telegram group chat. I post constant updates on stocks like PayPal, as well as a series of other stocks that I trade, such as Robinhood, Nvidia, all of the top stocks that you currently see in the US stock market. I am a trader of. In fact, my Signal team is up significantly this year. We're up around 81.17%. The month of May, we just had one of our best months ever, up 44.62%. So as I mentioned, we know we trade stocks like Supermicro, Meta, Robinhood, and Nvidia. We also trade some of the indexes as well. So if you'd like to join my signal team, make sure you visit my website, dailymarketmovements.com. The link is in the description of today's YouTube video. But if you're new to the channel and you enjoyed today's video, then make sure you give this channel a subscribe and a thumbs up. Thank you very much, and I'll see you all in a couple of days' time. Have a good weekend.